Welcome back to the Capital Multiplier Podcast. I am Alex Jaso. Today, our guest is, and let me know if I'm not pronouncing it correctly, but Jean-André Ahipeaud. He is an investor and a researcher. He is in the venture space trying to figure out how venture companies can get better results from their portfolios. Jean-André, this is a topic that is very interesting to us because we want to know how to optimize our portfolios, how to get better returns. Tell us a little bit about who you are and what your research is about.
J3A Partners AM is a venture capital fund management company that invests in disruptive digital technology in Europe and Africa. I'm a National Paris graduate, and right now I'm doing research in finance at the University of Durham. My research topic is about the improvement of early stage decision making of VC fund investing in ICT or IT related technology like fintech, insurtech, ftech. So my main study is to find the best way to optimize the return on investment of investors who are putting money in VC investing at early stage IT related projects.
I'm curious, your research on early decision making, does that apply only to early stage funds, or does the research show behavioral results that are applicable into the later stages or even in mature companies?
Mainly, it's applied to early stage fund. But early stage investment is the most difficult because you are betting on future with no reliable data. So it's very risky to invest in a project that has no track records. You have nothing to take into account when you are doing your due diligence. Okay.
So, what do you do? If the data does not exist, how do you create a model to solve that?
You have to take into account the IT architecture that is implemented and how easy this can be if you want to improve the system later, if you want to protect the system later, and if you need experts to bring in your team later. What is known is that 80% of IT projects in the world fail to be delivered on time or to be delivered. How can you be sure that these projects will be on the markets on time if you don't take into account the IT risk embedded in the IT projects?
Yep.
So my work is to show to investing in IT projects, and you are talking about financial figures. You will never have customer if you have no software ready. You will never have customer if you have no database to receive your customer orders or to receive your customer money. So you will need to mitigate the IT risks embedded in the IT project.
Okay. To summarize it by saying, in early stage, there are a lot of unknown variables that are common to every type of company, whether you're doing a insurtech company or you're doing a some other non-technical business. Early stage is just an unknown. But if you don't have the infrastructure required to deliver the product, then you're not going to be able to deliver on time. And my question to you is, in the absence, so I guess, does this apply even at the earliest of stages where there is only an idea? And then do you evaluate the technical prowess of the founders, or do you apply the model only once they have an MVP running, and then from there you can make the quick differentiation of this team knows what they're talking about. They have something that is scalable. Maybe this isn't something that is set up well, but it's going to be very easy to transition in the future. Or, oh, this team doesn't really understand that the route that they're going is going to lead them down a very complicated path. At what stage of the company are you able to hop in with this research?
At the idea stage, you are looking for family money. We call it family money. At this stage, you don't talk to venture capitalists. Venture capitalists only arrive when you have at least a prototype of your projects.
When you're analyzing companies, what proportion of companies have a scalable model? Are you seeing that the vast majority have something or they don't?
The problem with this business is that a lot of business school backgrounds have no idea what IT risk is. So they are talking about market size, about blue ocean opportunity, return on investment, about portfolio performance. According to research, 20% of the portfolio companies provides 80% of the performance of the portfolio. So we do have a lot of them who don't really have scalable models. And the best ones have scalable models.
Yeah, that makes sense. A fancy pitch deck from a business school student leads investors down a path of an idea, but you're taking a very pragmatic approach of, is it going to work? Can it grow? Can it scale? Tell me a little bit about your background. How did you come to this thesis?
I started as IT engineer in the banking and insurance industry. I worked there for 10 years. And after that, I went to business school to do my MBA. For 10 years, my job was to look for IT risk embedded at any stage of the development process. So when I started to work as an investor, I had this background of a software developer, IT architect, and financier.
Tell me a little bit more about J3A. What is the ideal portfolio company that you're looking for?
Okay. At the beginning of this podcast, I told you that I designed a risk adequacy model. So I only listen to my model. The ideal portfolio company I'm looking for is a company which is in my model, which has no probability of failure, or which has the lowest probability of failure, the
Mhm.
lowest probability of failure. My model can give you the probability of failure of a project. So when we assess a project through my model, we can have 40% of failure, 50% of failure, 60% of failure, 70% of failure. So for us, the project in which we invest must have less than 30% of failure.
Okay, that makes sense.
Yeah, because we are investing according to our risk adequacy model.
Perfect. And how long have you been implementing this investment strategy with the model?
10 years.
10 years. Okay.
I started I started it before um, applying for the doctorate.
Okay. Perfect. So, for any of your peers out there that are trying to come up with their own model for their investment thesis, what advice would you give them?
My peers, so you mean people who are investing at early stage, right?
Yes.
Okay, people who are investing at early stage, if they ask me, I will tell them to not invest in idea. Yeah, to not invest in idea. They need to have something on hand. They need to have at least a prototype or something scalable. But that's the only way to decrease the risk of not reach the market on time.
Mhm.
Because as an investor, you don't want your money to sleep for nothing. And if the project is not delivered on time, that means you're losing money because you are enlarging, you are increasing the time, the return on investment time. You see? So for an investor, the best project is the project which is delivered on time and which starts to make money quickly. So the return on investment is short. The return on investment time is short. It's always better to have your money back in 5 years than in 10 years. And maybe
Of course.
never. So I will advise them to not invest in idea. They will need to um, look for something tangible projects which has already started, a software which has a prototype, or a software which needs to be funded to improve the development team to be on market, but not just an Excel sheet with a lot of projections saying that in X months we will be billionaire or something like that. It doesn't work like that. Life is different from what you can put in a sheet. It's better to have something on hand than just looking at Excel sheets.
It's like the old adage, ideas are cheap, execution is everything.
Yeah.
Perfect. So then for anyone that wants to get a hold of you, what would be the best place to get in contact?
We have our website, the J3A Partners. I'm also on LinkedIn. That's the easy way to have me because all my phone numbers are online, so people can reach me directly by visiting my different web pages. Yeah. J3A Partners
Perfect.
AM.net and my profile, Jean-André Ahipeaud LinkedIn.
Jean-André, Thank you so much for being on the pod. I love
You're
hearing
welcome.
your approach. Thank you.